JP Morgan, Goldman, all with up arrows. And from 0.2% to Amazon, which is the best of them, up 0.8%. Diane King Hall is joining me now and taking a look at a few of the names on the move. This is the 10-year bond yield. Has moved higher 2 bips in the last half hour or so. Now at 420, so I wanted to note that. And you're looking at Huntington Ingalls this morning.
Yeah, it continues to catch a bid today. Smaller today than its recent moves that we've seen, but it continues to hit record after record, and this comes as defense spending momentum increases here. So it's really put the wind at the back at Huntington Ingalls Industries. In fact, besides the records, this has been one of the top performers in the S&P 500 year to date. That stock is up more than 80% this year. This coming after the Navy selected the company to design and build a new class of frigates. To explain what that is, that's a medium-sized Navy warship that's designed to protect the bigger ships and patrol key waterways. As part of this broader push to expand U.S. naval power, President Trump, this comes as he unveiled plans for a new Golden Fleet. These include large Trump-class warships. Huntington Ingalls says it's already invested some $1 billion in shipyard upgrades to support next-generation platforms. Again, shares have been outperforming this year. This comes as investors just continue to bet on defense amid rising turbulence within geopolitics, faster production timelines, and then these long-cycle defense contracts, which bodes well for Huntington Ingalls. Again, more recently, it's about the tailwind from the Golden Fleet, with President Trump announcing plans for this new fleet. New Trump-class warships is meant to anchor U.S. naval power. Huntington Ingalls is already confirmed for the new frigate program. The larger battleship program is still competitive, so there is some potential upside, and just the competitive landscape, there's some competition out there.
Look, we know the Trump administration was always big on doing anything with aerospace and defense and things like that. The warships come right into their sort of MO. Also, what we've been seeing with Venezuela, tankers being blocked and seized and that kind of stuff really fits into the narrative there. So keep an eye on HII, which, as you noted, is a great performer here today. Reddit gets this big conviction call. It's pretty impressive. Let's hear more.
This is that time of year where we're getting the 2026 picks, right? Who's going to be next at the top of the leaderboard? And Needham says Reddit is its top pick for 2026. It has a buy rating on this one. It has a $300 price target on Reddit. Reddit has had strong performance year to date. It's up more than 40%, so it's outperforming the S&P 500 on a year-over-year basis. Also has strong momentum around it. It's booting Roku out of its conviction buy list and adding Reddit instead. The big differentiator here for Needham's point of view is the human-created content here. They think that gives it edge. It creates more trust, more authenticity, and just more usefulness, especially when you think about the AI companies training large language models. So that's how Needham views this one, and pointing out that, you know, the internet is now crowded with bots and synthetic content, and so they say that Reddit stands out in a world that's proliferated by bots, and so they see that as having a premium. Now, does Reddit use AI? Of course it does. And it pointed out that Reddit is already generating over $100 million a year in licensing fees from its interaction with AI players like Google's Gemini, like OpenAI. Needham says that could double as it expands its relationship with, say, Anthropic and Perplexity. So they see AI as becoming a recurring revenue stream for Reddit. So again, they see that this as one, it's a top pick for them for 2026. And this comes after already having strong performance this year, Nicole.
All right, last but not least, George gave us a little bit of that.
That's right.
You know, we were looking at gold and silver, and gold has not been up over 50% except since the 70s. There were 3 years in the 70s, and then now, this year.
Yes.
So it really shows you what's been going on in the world of metals and precious metals. You're looking at Alcoa and Freeport-McMoRan.
Absolutely.
Tell us more.
Yeah, listen, the wind has been at the back of the metals. I mean, as you mentioned, gold's record run, it's been 50 records this year. You mentioned the number 50 there, and then these key levels that gold is crossing, that silver is crossing. Freeport-McMoRan has more conviction around it thanks to Wells Fargo. The stock is moving higher off the back of this note from them. The stock's up more than 1%, up more than 30% year to date. Wells Fargo is adjusting its price target, raising it to 55 from 47.
Oh, yeah.
An overweight rating, essentially the equivalent of a buy rating for for Freeport-McMoRan. They say that supply constraints should support copper prices. As we know, copper's been on the move as well. They say copper demand remains firm while new supply stays limited. So the supply-demand scenario they see as being favorable to Freeport-McMoRan. Also raising their price target on Alcoa. They've raised it sharply there to 58. That's up from 40. They've got an overweight rating as well. Already had that rating, but raised that price target as well, given the momentum that we've seen in metals. Alcoa not really moving on this, but again, that's been a strong performer this year as well, up already more than 40% as we wind down this year. So big picture takeaway, Wells Fargo is constructive in this space. They see just structural supply tightness in metals lasting well into 2026, and they think that bodes well for these companies.
All right, Diane King-Hall, great to see you. To continue your coverage here. Folks, we're going to keep you going. Right now, the Dow is down about 86 points, but the S&P has turned positive. So, Albemarle, Micron, Texas Pacific, those are some of the names that are leading the way. We'll be right back.
Recap the news. I help you read between the lines from what's moving markets to what's next with sharp takes and market know-how. Follow me on all social media platforms at Diane King-Hall and connect with me on LinkedIn for more.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Alright, my bad.
Had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad?
He's
been with Schwab for a long time.
Jim, my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. Joining me right now, Chris McMahon, President and CEO at Aquinas Wealth Advisors. Thank you so much for being with us. You're looking at today's market action. You've got past year, you're ahead, looking forward as well. How do you feel today here with the market action today? What grabs your attention?
So I feel way better today than we did April. Remember April when the tariffs came out and everybody said it's over and the bubbles would deflate? I think we're optimistic. I think we share the view. Like Deutsche Bank, like JP Morgan, we think next year there might be some pushback a little bit of adjustment. We think ultimately we're going to have a decent year in the market. the Max 7 has been so concentrated over the last 16 months that we think it's going to spread out. We're going to see that we're going to see some the regular blue chip stocks do well. So we're actually very optimistic. Interest rate cuts coming. We think we'll see some good things happening in the broader markets. We think it's going to be a spreading out of a little bit more riches for everybody as opposed to the Mag. Really, the Mag 6 is what it was for the last 18 months.
So you would say you're more bullish than bearish.
Yes.
You know, what would be the catalyst? You're giving us some of it. Just continue to talk about what drives this market. I mean, you're buying on dips, I presume. What are you buying? Things like that.
I think you're right. What drives is just consumer sentiment. I think this used to be a stock picker's market, and all the pundits got to make all this, got to decide what happened in the market. And it seems like consumers are taking a stronger position. It seems like this kind of decentralization with crypto is taking place in the equity markets as well, where we're seeing consumers drive things that disregard what the pundits are saying. We've been talking about deflation, as you know, for 3 years, and the consumers just didn't have the appetite for it. Said, no, we're going to continue to drive this market. So I think we look at, first of all, consumer sentiment number one, interest rates number two is a huge thing, and I think number three is just the general business climate. And these interest rates coming down, we think is going to really push, particularly housing. We like that very much. Really, healthcare is poised for a pretty good comeback too. So as we look at things today, we're still holding technology. We're certainly not, selling the technology, but we're saying maybe take those out, trim those allocations a bit. If you're normally 16, 17% technology, maybe you get back down to those numbers. Maybe you can go down to 15. We're seeing some portfolios that are as high as 25, 30% technology. We're saying maybe trim some of that and go find some of these other stocks that we've been talking quite a bit about,
Yeah, understood. I mean, a name like Palo Alto Networks, why is that a pick for you? People have loved it, right?
We love it too, and it's funny because I just said let's go easy on technology. The first one is Palo Alto, but they spent, as you know, $30 billion. This acquisition of CyberArk is an amazing thing. A $25 billion acquisition. What we think is the customers are going to say, we want to go to one place for all of our web security. We want to see it in one place. You saw the huge acquisition by ServiceNow. So we're seeing this kind of consolidation in the space. We do think Palo Alto is where many people are going to go because they're saying it's a one-stop shop. Instead of having siloed vendors, we think these consumers are going to take this much more seriously. We think Palo Alto is uniquely positioned to benefit from that. And we'll see what happens with ServiceNow too. That's a pretty bold acquisition by them. And I think these two particularly we've got to keep our eyes on and maybe own for the next 6 months or 12 months for sure.
You said Max 7, Max 6. Which one were you leaving out? And I know you do like Amazon because that's one of your picks today. When you look at the Mag 7, do you like most of them? I know Amazon's your favorite of the group, I guess, but...
I think you're right on, Nicole. I think we're calling it Mag 6 and we weren't counting Amazon for a second because, I always say that little retail business they have, right? The largest retailers in the world, that's really languished for the last couple of years, right? But I think so we see the consumer business picking up because of this cutting interest rates, consumer optimism picking up. I think a few weeks back we saw that net worths, in spite of everything that's going on, there's some darkness on the horizon always, but net worths have never been higher. 401k balances have never been higher. What that means is consumers do feel confident. Consumers will spend. We think that'll drive the retail business, and we do think that web services, Amazon Web Services, is poised to be just continue to grow. I've heard some things that I don't agree with. I think they're uniquely positioned to dominate this marketplace. And remember, when this consumer business takes up by 2%, that changes the world. So we think if it was a Magnificent Six, maybe for 2026, Nicole, Amazon will be the Magnificent One, and that's what might be the case. That's what we think of this.
All right, and last but not least, a great American company, and that is Boeing, on the road to continued recovery. I mean, they've had so many PR issues and, obviously fatalities too over the many years, but, everybody counts on Boeing for obvious reasons, national security and things like that. It's been on an upswing recently.
Yeah, I think finally, but I've said this before and I apologize, but I think their leadership finally positioned to take this thing to the next step. I think 737 production is going to go from 38 to 42, which we think is valuable. More importantly than that, I think when we get those Dreamliners, they're going to go from 7 Dreamliners a month to 10 Dreamliners a month. Their backlog is $600 billion of backlog orders right now. So honestly, Nicole, to some degree, and there have been tragedies, of course, which is of course, deeply troubling. But I think they should take a step back, look at their leadership, look at their commitment to safety, and look at their absolute necessities. I mean, as a company, I think Boeing's a long-term fall.
I don't know what you just said. Say it one more time.
Look, year to date, it's up 22%. The high was 242. You like it. JP Morgan actually put a 245 price target and an overweight. So they think that they break out beyond the 242 and actually make new highs in the next 12 months. So on board with your call there. Okay, Chris McMahon, great to see you. Aquinas Wealth Advisors. Thank you and have a wonderful holiday. Thanks, Chris. Coming up, the key levels to watch on the charts right now. Kevin Green will give us all the details here as the S&P is up 10 points. We'll be right back.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage, straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Welcome back to Opening Bell. We already saw going over the change line, so stay nimble here. And joining me right now, senior markets correspondent Kevin Green is taking a look at some key levels to watch here. Good morning, Kevin Green. I think you're looking at the S&P 500, right?
Good morning, Nicole. Yes, we are. We are seeing around 40% of stocks in the S&P 500 in the green so far. And the MAG 7 for the most part is actually holding up. And we are getting close to all-time highs, Nicole. I think we're only about 30 points, 32 points away. So let's see if we're going to be able to hit that for today. The major area of resistance that I'm focusing on is going to be the 6,900 level to the upside here. Let's see if we are able to actually break through that level, especially with the economic data that we have on the calendar today. It's already been released. And then also that 5-year Treasury auction we're going to have later on today, how that is actually going to impact sentiment for the market. Any type of breakdown, you're looking at support at 68.70 and then 68.50. So a lot smaller range today being priced in. If you're just looking at the options this morning, than what we've seen over the last couple of days. VIX still having a 14 handle. Keep your eye out on that. But we are kind of proceeding to the upside. Let's see if we're going to be able to maintain this. I think that GDP number was actually very interesting, and you did see yields moving a little bit higher on the 10-year. I'm not sure if that's a little bit of a cause for concern for the market or if that's kind of an early cycle behavior. Yields moving up, equities moving up, as we do see more of a risk-on tone hitting the market.
All right. When we look at what's going on with the 10-year bond yield, we've got in the GDP print and durable goods and things like that within the GDP. We've seen bond yields, the 10-year bond yields, moving up a couple of bits, right? What stands out to you in that story?
Yeah, we continue to see this technical bear flag. The yields have been moving to the downside, but we have been consolidating over the last
I'm trying to understand exactly what you're saying.
Flagging to the upside and hitting a key area of resistance there around this 4.
Yeah, say it one more time.
If you're looking at the 10-year rate futures,
no,
looking at that 200-day moving average, that
I hit my growth speed, and I'm just like, what are you talking about?
But it does appear that the yield
I was
complex,
texting
for the
too.
most part, maybe trying to break out here and break out higher. If that's
And I got
the
some
case,
good gas
we
too.
actually might see spreads coming in between that 1 and 10-year spread.
No, you ain't. You ain't have
There
to be.
might be a headwind when you're looking at the financial
You
sector.
better look out for me. Yeah, you might have me. I know you have me
That can
for
also
me,
have an
boy.
impact when it comes to small cap stocks. So keep your eye on this. Once again, we have a 5-year
You
Treasury
should.
auction
Think I wanna do it
that
for you.
GDP number that was a little bit more of an outsized number to the upside than the market's expectations.
Who are you
Let's see
then?
if the institutional
Tell me
appetite
who
for
you is,
treasuries
man.
is still going to be robust to try to keep these yields in line.
Yeah, understood. I mean, when we look at this now, thank you for all of this because we're going to
That shit didn't have. You said it was. You said that.
Green, thank you.
I'm spending money on everything.
Folks, here at
That's
the
y'all
GDP
problem.
print, the 4.3% GDP print.
Y'all was out like
that came in.
y'all still y'all high horse.
Years, but it was before the government shutdown. And we'll continue our chat here with our market meetup panel. Joining me right now, we have Kevin Hanks on board and also Dan Grant taking a look. Kevin, we had talked about the GDP print, and you know we have to take into account. You used the word old. It's delayed. It was before the government shutdown, but the 4.3%. What are you looking at now?
Yeah, this is, well, when we look at the GDP number, make no mistake, it's a good number, but its effect on the market was probably minimal just because it's a number that should have come out mid to late October, and it comes out 2 months later. We're only going to get one update on GDP, that's January 22nd, so we'll get one update. We normally get two more, so listen, we're waiting for the data to catch up so traders can really start to trust it because, you know, let's face it, 60, 70, 80 days, a lot can happen in an economy. You start to see numbers like we saw in CPI that were dramatically different than we thought they would be or what the consensus was. Similar here in GDP, so we're working through some of the volatility of the overall economic data. Good news, inflation was lower, GDP stronger, Nicole.
Yeah, understood. I mean, when we talk about also the bond yields moving higher, you know, 420 is sort of the highest end of the range that we've seen in the last month or so. I mean, at one point we were at 398. We've moved a lot in the last 4 or 5 weeks, I'd say. But 420 is the high point of the range. I mean, I can't say that I saw 424 or anything like that with my own eyes recently. Your thoughts on this 420 today on the 10-year bond yield?
Yeah, so we're bumping up right against that point where we're at the resistance, right? And we're seeing the gold and silver, the commodities blowing out to the upside. Crude oil not being part of the party. The bond yield up at 486, that's unchanged. A very muted reaction here, I think, from the numbers today. But we finally, the key is, like Kevin said, we are finally getting the data, but there's holes in it, right? So the short end is higher.
These people was telling me
looking at the SR3 D26, and that's down about 4 basis points. That's putting the hedges down at 3.18 yield. The 2-year note sitting at 354, the 3-year sitting at 360, and then that 3-month that everybody's looking at 362. And that is kind of a key market that's going to be showing Fed policy. There's still an 85% chance that
first of all, I played with Joe
January.
I was trying to
get some more data.
The
number that I kind of want to look at today is the consumer confidence.
You should have seen it, bro.
I'll make a video show you the number, I'm going to call it. It's not a hard economic number.
So you got Joe, he's the indicator, bro, but he can't really shoot straight up. Yeah, he can't shoot Lil Joe, no dirt. But he can't create his own shot. He won't shoot. He's just trying to attack the basket. Just running around in a big circle into the rim, right? So not only everybody seeing that dumbass shit, you got me cutting back and forth, and I'm just screaming for the ball because I'm cutting in front of my man, I'm hoping that's a shot. You know, as soon as I get the ball, my man behind me, that's a couple pump fakes in the layup. I don't know that I'm gonna see that. So you got the big man got him. He's screening and rolling down the center too. So it's not only the screening, the rolling man in the paint. Joe trying to crash in the paint. It ain't like he's using the screen to get open for a 3. He trying to run around the whole court, missing the randoms, wide open, missing me wide open. You know what I mean? He did it like 8 times, bro. Then he gonna say, then they gonna say, damn, this game is downhill.
What's next for gold and silver and metals in general? What could possibly be next? Usually, higher prices bring in more supply. We'll see if that
while
happens.
we was playing, bro, I was telling the big man to space the floor, bro, and I was telling Joe, I'm cutting, like, as soon as God get the rebound, you know I'm already down the court, bro. That's a couple passes. I mean, if y'all get the ball off the court, that's a shot in transition or a layup. That's a bucket. At the very least, you got numbers. That's why I'm up court already. That makes us have numbers, bro.
trading day tomorrow. So keep that in
Joe
mind
missing
as well,
that,
friends.
the big man
Thanks
missing
for being
that,
with us
and
here on
then they
Opening
missing everybody
Bell.
else.
I'm
And then you
Nicole
got Joe
Beverly
coming down
every single
just so he
day
can
here
just try to
on
attack the basket
9
like 3
a.m. to
people
Opening
because
Bell
they just
and
watching
2
them run
p.m.
around
for
get
the
to the
watch
paint.
list. So
So
tune
the
in
big
at 2
trying to stuff
p.m.
his
I'll see you
stuff.
then.
He trying to block
And
that
keep
shit.
it right here. Morning
And
Trading
he just
Live
kept
with
doing
Tom
it.
White.
Never was
Coming up
shooting,
next.
never was really hitting the randoms. He do hit the randoms, they make it. You give it to me, we make it. Now they want to do something 5 times in a row, 5 possessions, to start fucking shit up. Throwing turnovers too.
Schwab Bank
And I'm
Investor
just like,
Checking,
bro, you
the
gotta
checking
see
account built for
how you not see
investors,
this dude
named
right
the
up in the
highest
corner.
in
You not
client
hitting him.
satisfaction by J.D. Power
Keep
for
running
7
all
years in
around
a
and
row.
shit.
With
Like
Investor Checking,
running
you get
and
the
passing.
award-winning features of our checking account, plus cash
But he
management
just came out with his
solutions,
point
all
guard.
designed
I was
for
really trying to go
investors
on with
like
the
you,
big
with
man 'cause
unlimited
Joe wasn't trying to
ATM fee
hoop, but
rebates for cash
when-
withdrawals worldwide, no overdraft fees,
when-
and enhanced security features
I was in
to
there with
keep
Be
your
Nice
money
and
safe.
Joe
Also,
wasn't trying to hoop.
because your
So when
investor
Gavin
checking
came in,
account is linked to
and I was
your
like, come
Schwab
on,
One
let's go in,
brokerage
big
account,
man.
you can
And
manage
you,
your
that's
checking
you know,
and
I'm just
investment
got.
in one convenient
That's when
location.
Joe was
Moving
just,
funds
all right, I'll
between
play.
your
Yeah,
accounts
we
is
get
easy.
more people to
Cash
here,
moved to your
yeah.
brokerage account is
Now we
available
can get
in
5,
seconds.
yeah.
That means you can stop waiting and
Yeah,
start
Joe
investing in
Dirt.
stocks, bonds,
And I already know
market
he
funds,
garbage. When
and
I first met
get
him,
more.
I
With
told
Schwab
them I was
Bank
going to lead in
Investor
every
Checking,
single
the
category on the
checking
court.
account
Before I even
built
did it.
for investors.
That's how I met him, bro. Him and Chris. Those would be nicest friends. Them RL dudes. I don't mess
Welcome
with
to
them.
Schwab
They
Network,
weirdos.
where real-time market
And they know that.
coverage, expert strategy. From the
And I know they
opening bell
garbage
to
too.
the
I
closing
seen them
bell.
play. Every single time I seen them play, they garbage. I'm serious. People just telling them what to do and they want to do their own. They playing the game. And you can tell the people that play the game and know the game.
but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas.
Somebody that just played Madden, you know,
With shows built for action,
like some little kid or
break
something.
it all down in real
But people that be playing Madden know what plays to pick, know what defenses they running.
I think one of the most important things
Know what
is you're
works.
making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Nothing wrong with that. Like Madden is popping. People still go. Yeah, that's my whole point. Like if we see it like that. No, it ain't even that, bro. It's just I already explained that point thoroughly. I don't even think y'all understand. If y'all got capital,
Anything behind, literally come across the
No.
entire world. I think that we
No,
probably
no, bro. This is what I said, bro.
has been with us for 25 years.
If you got Will Chamberlain on your team, who else get the ball?
They've always been there for us.
That white boy over there? No, you give it to Will Chamberlain. And I ain't saying I'm that. I ain't saying Be Nice is that. But on the team, he is that.
Stay connected to
On
what moves the
y'all
market.
team,
Download
y'all got
the
me on there,
Schwab
I am
Network
that. When I'm
app
playing with these
and
randos, I am
stream
that.
anytime, wherever you
All
are.
these other teams I've been playing with, I am that. When I showed up to get playing with y'all, I was already purple. Just running through people by myself. I'll hop on this mic. I said, bro, if y'all play right, if y'all gotta give me the ball, give me the ball. As soon as I came here with purple, they already give me the ball. But I'm playing with y'all, I don't get the ball. Be Nice, get it, but I ain't talking about him. He gonna put the ball in the basket. That's what we need. Those the people that should get
Whether
the
you're
usage
an
the most.
experienced investor
The people who can
or
pass the
just getting
ball
started,
and score the
Charles
ball.
Schwab offers a webcast
Like we don't,
that's right
you don't
for
come
you.
up and give it to Rick
Are
Fox
you
and
an
be like,
active
hey,
trader?
bro,
Our active
make a
trading
play.
webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more.
yeah. It was Kobe first, and then Kobe, he do some little dance to trick the defense to get 2 people on him,
It's interactive
and he makes the
learning
right
at its
play.
finest. Tune in live or watch on
Or he
demand.
just killed. He just
Head over
killed
to
one man all day until they killed that
schwab.com/coaching
double.
and start learning today.
That's literally how basketball works, or how it mostly should be played. Cause it's put a man on them. It makes the defense react, and then you just take advantage. You have your motherfuckers slipping to the back door. You have people doing all-ball screens, getting over for 3. If 2 people's guarding 1 person, bro, it's a wrap. Whenever 1 person cannot guard a person, bro, like just so badly, bro, where they have to switch up, you gotta put a fucking damn small forward on the damn point guard or some shit where he about to get killed too. You know what I mean? Like it's just so rough, bro. That's why it's so brutal, bro. Imagine, boy, over here, bro, Hey, Kentucky, bro, they was doing people like that in real life.
Right in for Sam Vadas. You got plenty to hit on.
You come out here with your C team and you was going against a B team. Some people that was on the high school basketball team before, they'll start ISOing y'all. Everybody, space out. Oh, mouse in the house. Mouse in the house. You know what I'm talking about? And then somebody just start killing dude one-on-one right there. In the post, or just ISO and just killing him too. 3 dribbles kill him. 3 dribbles kill, 2 dribbles kill him.
Now let's take a look where markets are, half hour into the trading day.
You know what I'm saying? We in the crew with a bunch of people that. Think about this, people.
The NASDAQ 100.
We in a crew with a bunch of people that ain't never played 21 hard before. We used to play a bunch of hard ass games 21. You get me?
Over 1% yesterday, now down over 0.5%, leading.
No, 21.
At this point, we've got 10-year yield gaining some strength.
You ain't go to no 25 though.
Small caps. Now let's take a look at some of the foreign markets.
I want the 20.
How they fared in today's session.
Yeah, with the 25. Wow.
The DAX out of Germany up just over.
I have never heard that. Who's going to 21? It's going to 25. Bro, those games be so fucking hard sometimes.
So basically mixed markets overseas also. Now let's take a look at some of those other asset classes that should be on your radar. 10-year yield, as I mentioned, gaining some strength. We're back up to 4.19%. Still in consolidation mode. Between about 4.1 and 4.2%. U.S. dollar index taking a hit here today, off session lows, but still under pressure. We're at 2-month lows for the dollar, and that's lending some upside support to gold, which is another all-time high this morning. Crude oil under pressure now, was higher earlier, now down about 0.5%, back below $58 a barrel. And Bitcoin down over 1% after a nice rally yesterday in yesterday's session. So that's how we set up here for the day. Basically flat. Let's bring in our first guest though to help me break down these markets. That's Kevin Green, senior markets correspondent here on the network. KG, I wanted to get your take here on just the market action. I noticed yesterday, and I wrote it up in my morning note, that the VIX settled at the lowest level in 12 months as, equities are at or near all-time highs, but it seems like, maybe protection or hedging is pretty cheap right now as far as option premium goes, but maybe they should be, KG, because it feels like, we're okay right now.
Usually when we see volatility at these low levels, that's when you want to pick up vol, right? At the end of the day, it's a lot easier for volatility to move rate higher than it is to move lower. And you're right, from a seasonal standpoint, the VIX does get crushed in December, but usually it's actually before the quarterly options expiration and not after. So yes, we are seeing low vol. We're seeing the markets kind of pull back here a little bit after the consumer confidence number, but I think the data set out this morning, especially when you're looking at GDP as well as the prices component, is still kind of maybe throwing some confusion for a lot of traders and investors when it comes to this data,
that's why I said.
which is why we're seeing yields to the upside, market kind of gyrating. But we're only about 30, 40 points away from all-time highs here, Tom. So volatility crushing for now. But usually when we have that 14 handle on the VIX, doesn't last there for too long. Maybe 2 sessions, 3 sessions or so, and we see it re-rate a little bit higher rather than it going lower.
I really want some long first. I want to get.
Initially, we got a little bit of a bump on the GDP number that came in about just over 2% above expectations at this
everything's
point.
going
So
down.
that was a good number.
I thought today
We did have consumer confidence out of the conference board here that just came out, 89.1. Estimate was for about 91. That's above the previous
I just wanted to see what was going to do.
88.7, revised from 92.9. Present situations of KG, 116.8. Previous was 126, so that's come down. But expectations moved up to 70.7 from the previous 63.2. But these numbers, these confidence numbers, even though we got a pretty good GDP reading here for this Q3, that seems to stay in low levels right now. So it seems like it's bifurcating where maybe consumer confidence and sentiment data is weak, but at the same time, people are still out there spending, supporting the economy, right?
Everybody got to listen to
Yeah, that might be the case. I think when you're looking at the GDP number, I would expect probably a pretty decent revision for the next print here. And you are seeing confidence move to the downside. Obviously, prices continue to stay elevated. It's not only when you're looking at the conference board consumer confidence number, but also when you're looking at the University of Michigan consumer sentiment data. It's pretty much almost going one for one at this point in time. Not only if you're looking at the totality of the data, but also if you split it down political parties. And so we are seeing some positive spin here. When it comes to the consumer, I would say that GDP number, though, is a little bit, you got to be skeptical of it, Tom. There's a lot of month-over-month changes when it comes to the August to September data set. If you're actually looking at that right now, we saw massive adjustments to the upside when it came to consumer exports. You're looking at around 18% increase on a month-over-month basis from August to September. That's rather large and something that we just have not heard in a lot of
we're actually pushing up
from
there.
The market's a little bit skeptical of it. There are some pockets of strength here.
I mean, you know that they was trending down. There's a lot of volume coming down there. Hold up. It might stop right here where you just got in at though. Just like last time actually.
The data really normalize out.
It's at 45.
Yeah, we're only going to get
pushing
two
upward.
reads on Q3 GDP also instead of the normalized.
A358, I mean, it's going over.
Shut down in some of those. KG,
52
when you
now.
look at this, fastest pace since a 4.7% from Q3 of 2023. I know these numbers might be skewed. We might have to
what happened, bro? You alright?
Out. But if you look at the data when that came out, expectations for that Fed rate cut in January and March went lower pretty significantly.
Bro, how you be doing this, bro? That is crazy.
Percentage basis here, so.
I said, how you be just spot on sometimes with this? Well, all the time with this. Right? I said, how is you so perfect in this like that? That's wild.
We start, maybe getting.
Bro, you just did it again. What happened yesterday, bro?
Solid data that maybe those rate cuts aren't needed at this point.
That makes sense. I don't remember a time where the Fed was really gung-ho about cutting rates, and we had, let's say on average, between the two prints that we just got for GDP, let's say the economy's growing at 4% net
what happened?
Cutting rates in that type of environment seems like a tall order here, Tom, and I think that's why you're seeing the yield complex moving a little bit higher, especially when you're looking at the longer end of the curve, because
I was thinking something else happened, but you just had to go to high. Oh, it's pushing downward, bro. It might come down a little bit more somewhere.
Verify a lot of this data set. Once again, if you look at the month-over-month changes between August and September, there's definitely some anomalies that are there. Now, let's say that we are seeing this 4% GDP growth. Maybe you get one cut next year as an insurance cut in order to kind of boost.
I can't say what I want to say about this girl because I'm in front of my screen. But
more than that, just based on this data set alone.
Boy, I don't care what she's doing. She's going to do that with me too, though. That's all I do know. She ain't talking about doing that. Man, what we even talking about? That's all I know. You know what I'm talking about?
So you are seeing some pockets of strength within that portion of the economy, but manufacturing still seems a little bit weak. And even if you look at these GDP numbers today,
bro, that's how you get chosen, bro.
The manufacturing economy that was concerning for.
Bro, it's already dead. We too old. You think these people are sitting here without nobody?
About 11,500 jobs.
We don't.
Average there.
I'm not here with
maybe turnaround in the jobs market. Who knows at this point? But KG, and expectations for that rate cut in January down to the
everybody's nasty. Yeah.
That's about a couple days ago. So yields up a little bit on that news also. But one area in the market, Kevin, that's been doing really well recently and so far in 2025 that you highly follow is the commodity space. We got gold that hit another all-time high above 4,500 an ounce earlier. Now pulled back, relatively flat. Silver hit a new record high. We had some strength in copper also. Dollar, as I mentioned at the start of the show, hit 2-month lows here earlier in the session. So everything seems to be going right for commodities right now.
I mean, honestly, it really is supposed to because of what is super bullish.
The commodity space definitely will probably continue to move higher, especially when you're looking at the physical commodities. Metals in itself, gold, silver, really priced in higher inflation, maybe even economic growth, as we just saw a pretty significant print looking at GDP. You have copper still catching a bit because of structural supply shortages, especially what's going to happen in 2026, where a lot of the production has been cut here. And I would actually kind of keep your eye out in 2026 for the grain markets. There's a significant amount of inventory build that is there, but it usually does not get left behind, as well as crude oil and gasoline. Those usually do not get left behind in this type of economic expansion type of environment here. So this
that's all it really matters,
some key
honestly.
areas that actually do catch
You gotta shut up and be consistent on it. That's all it matters.
if you're looking at the LME contract, this is the COMEX contract here. There's still a
Bro,
little
this
bit
shit
of spread
just,
between the two. Expect
that
that
shit was a
spread
big
to
ass
actually
bounce
kind
right
of
there.
normalize or narrow over the next couple of months or so, which could actually push COMEX prices higher. But this is going to have impact, I think, Tom, when we do see rate cuts, if we do see rates moving to the downside, and we have this refresh within the new housing market build out here. A lot of these input prices, once again, the physical commodities, could also increase prices for a lot of these new homes being put to market here. So I don't think we're out of the woods yet when it comes to the inflationary picture, but if we have this type of red hot type of backdrop for the economy, you got to look at the commodity space as a beneficiary of that.
Yep, I think getting some, expansion here as far as retail investors getting in, central banks buying gold at this point, and then you mentioned the industrial uses for some of these metals. Keeping the bid in these. All right, great stuff. As always, thanks to Kevin Green, senior markets correspondent here, breaking down markets for us. But coming up, we're going to examine what's in store for the deal-making environment in 2026 after a big year for mergers and acquisitions in 2025. More Trade Live coming right back at this show.
Don't forget to tell your lady that I'm going for my haircut appointment at the time on 4 o'clock. So I'm going to be over on High Lane at around 4 o'clock.
Yes, sir.
Bro, I can't even get up on the floor. I don't know what I did yesterday, but I should tweet.
I'm gonna make breakfast at the get into something. Yep. Some hash browns and some eggs.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews,
Some hash browns and
market
some eggs.
movers, and real-time coverage right from the floor. Subscribe now at
I was just gonna put some peppers in there and just try to fix it up.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz. Actually, I've seen something from Schwab.
What's your favorite? Yeah, Schwab lets you invest and trade on your own.
And if
All
you want,
of
they
them.
can even manage it for you.
Not to mention Schwab
Man,
is a
I
team
woke
specialist for
up
taxes, insurance,
yesterday.
and
I
estate
wanted me
planning,
a
all
Big
with
Mac.
fees.
I had a taste for that sauce. I had a taste for that sauce.
Schwab, a modern approach to wealth management.
No, I'll eat it. I like it, bro. I'll just be eating food.
The market.
Like, as soon as I can get a shorty, bro, we're gonna probably eat everywhere. But I'm gonna try to pick some healthy and vegan choices, because I ain't trying to get like big and, you know, I'm already hitting the little weights a little bit and walking a little bit. Might as well just kind of stay there. Nah, I only been there like once or twice. Yeah, bro. I went there and they gave me some sloppy food one time, and I went to yeah, bro. Like, no, it wasn't them. My fact, I lied, bro. It was Arby's. I was going Chick-fil-A over on Chevy Village, right next to Arby's over there. So we ended up going to Arby's. I did Chick-fil-A one time, and I did Rising Cane, and I couldn't really tell the difference between them two, boy. So I'd rather fix my own chicken, boy. I got all the seasonings already.
On the downside, First Solar, over 4% in today's session.
Yeah, we got both of them here. I mean, you know, chicken is chicken. Like, it would be good with some sauce, but that's what I'm saying. Like, as far as like how they just, you know, some people just season their stuff a little bit more.
But it's been a big year for M&A, and our guest manages a fund that takes advantage of these deals. Roy Barron, co-president and co-CIO of Westchester
I'm scared, bro.
Management, joins us now. Welcome to the show here, Roy.
Market, bro. The market. I'm scared of the market right now.
Pretty robust deal-making environment currently going on here. Do you expect that to continue?
I'm scared, bro.
It was a huge year. I mean, this was one of the
I'm in here though. I'm in one of these calls on the spot.
5, 6, 7 years or so. We had, typically a large deal is over $1 billion. They call mega deals over $5 or $10 billion. We had $4.5 trillion of activity this year so far worldwide. Most of it was in the U.S. and North America. We set a record for private equity deals, those otherwise known as leverage buyouts. Fourth quarter has been the busiest quarter for M&A in history, and we've had 5 deals that were over $50 billion this year. I assume that Warner Brothers is going to be one of them because it's going to somebody's going to
No
Netflix
point.
or Paramount, but that's $100 billion just by itself. Huge amount of activity, and a lot of it is driven, to be honest with you, by the change in the administration. The administration is much more, the current administration is much more business friendly than the prior administration. Mr. Trump replaced a lot of the regulators.
Man, that motherfucker ended up going
a
$1,000,000%.
Of a kind of a commerce friendly type of environment. So companies have gotten a lot more confident about getting their regulatory approvals, and they've been
Be watching that thing with that Jordan Crown face on.
Interest rate environment, which has led to an ability to finance these large deals as well. So it's been very, very good in terms of deal activity, and the amount of deals that have been closing as a percentage of those announced is much higher than it historically has been. It's very rare that you have a year like we had this year with very few deals blocked by regulators.
Yeah, and I expect that to continue with the new administration in place as they like those. Even this morning, ServiceNow acquiring Armis for $7.7 billion
I've been putting stop orders on those.
But when you look at this, I keep on hearing these rumors out there that companies are staying private, so they don't have that oversight. They can stay private because
like right when you said it, bro, I looked at it and said, damn, bro, same shit as yesterday. That shit, bro, what the? Yeah, you been cold. Bro, I told your mom, I said, bro, your son is cold as well. She said, yeah.
I think you're 100% right. I mean, you also have the kind of phenomenon.
So yeah, I think so too.
Companies that have gained so much value in such a short period of time.
Look, he must say he's a world champ, but who you trying to be? Either Jordan.
The liquidity event at $1 billion. Now you have an opportunity to maybe sell part of your company, if not go public altogether, or sell it to somebody else at a $4 or $5 or $6 billion market capitalization. So it's a good environment for financing transactions in general, whether it's a merger or acquisitions or going public transaction. We also have the rise of private credit, which has been a huge wind at their back as well. So it's very easy to finance these types of transactions.
Yeah, it seems like the capital out there on the sidelines waiting to get in, and as more investors are getting open to the private side of the market, that's going to be more favorable with that regulatory climate here. Are there any deals that you see moving forward in the future? I know you guys have that fund that you guys are focused on there. Any deals maybe down the pipeline that you guys are behind, or any sectors that you expect more deals to come about in 2026?
Well, I can tell you this, we've been doing this for 30 years or so, and historically have not speculated on future acquisition targets. Merger arbitrage involves investing in the shares of publicly announced mergers and acquisitions with the goal of profiting from the successful completion of them. But there are a number of consolidating sectors, industrials, tech, everybody's trying to get some AI. Manufacturing companies are looking for technology to help reduce their costs, make themselves more efficient. Some of the deals that we're looking at right now are deals that have already been announced. As I mentioned before, the highest profile transaction is the Warner Brothers situation. It's a bidding war between Netflix and Paramount.
Y'all dudes is crazy.
Everybody's attention because you have Larry Ellison in the background funding his son's attempted takeover, and they're at this point the hostile bidder because Warner Brothers has agreed to be taken over by Netflix. But I think the story's, to be honest with you, I don't think the final story's been told yet. That one's it still has to play out. You have Electronic Arts, which is the largest LBO ever. It's a $53 billion deal. That should close sometime around the end of April. You can make about 8.5% if you invest in it now, and it does close at the end of April. deal. It's $23 billion or so. Norfolk Southern is a gigantic deal. It's $90 billion. It's a rails deal, which requires a lot more regulatory approval, so it's going to take a lot longer. Everybody that we talk to talks about a robust deal pipeline. They talk about tons of money. They're very excited about the fact that they can announce a deal, do all the background work, and eventually get it approved. So that's been very, very good for the environment as well. And then also the stock market, which has kind of floated up, has made target companies much more amenable to accepting a bid when somebody wants to try to take them over or buy them out.
Yeah, that wealth effect coming into play here with equities just below all-time highs. You mentioned this at the start of the interview here that a lot of these mega deals are taking place here in the U.S. That regulatory environment helping.
That's how I be doing though when I'm out there.
Will that pick up in your opinion?
Yeah.
What's funny you should mention when you talk
That's how it be, boy.
cross-border activity as well.
That's how it be. I just talked to my family yesterday. I can't stand them, but I love them. You know what I'm talking about? It's probably the same way over.
So we're seeing a lot of cross-border activity. Europe has been very, very active as well. I believe
I'm probably gonna try to go over it. I thought I'd meet you. I'm probably go over it. I gotta see what they talking about. Dang, bro, this is ripping.
Stock market because it allows them to use a currency besides cash to make an acquisition. If their own stock has done very well and has gone up a lot, they can purchase.
Yeah, it was the same shit. I swear it was.
Or cash instead of stock. So it gives them
on point too, bro. This is crazy.
Yep, looks like it's going to be maybe another robust.
Kiva said they was pulling back and they did not pull back, bro.
Appreciate it. Have a great holiday season. Thanks for
my pleasure, Tom.
Yeah, exactly. Right there, bro. It did not fall from right there.
CIO at Westchester Capital Management. But coming up,
it didn't fall right there. Bro, that was like the perfect entry, bro. I said it did not fall from that 50, bro. Like it was at 57, like 56, bro. It went right up from there. Bro, you was precise as fuck.
All right.
Yeah.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
When you trade for DCU first, you gotta know exactly what price is about to go where you need to go. Exactly.
How's it going?
You know what I'm saying?
First day, so sometimes
Next. You gotta know when price is about to go.
You could have
You gotta
done
know,
better.
bud. You gotta know, bud. You can't get into a trade.
Same goes for where you invest.
$1 worth of drawdown.
Level up and invest smart with Schwab.
Yesterday and today, the trades that I got into, cuz.
Whether you're a bull or a bear, you want to catch the latest market action on Morning Rumors with me, Diane Kinghall, live from the floor of the New York Stock Exchange.
Nothing. It was just like this.
You see what I'm saying? I'm basically picking the smallest amount of drawdown possible. You see what I'm saying? Because I know I've developed a strategy.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support.
Yeah.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access.
Bro, I got out of this, bro.
Email. In-platform chat. Trade through that way.
That was a nice 11%.
The final 90 minutes of the trading day, that's when markets make headlines.
I don't have my position at 45%. I'm still holding on.
From early shocks to sector rotations, we're tracking the catalysts that move markets right into close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close,
Please,
live weekdays 3 p.m. Eastern, only on Schwab Network.
No, my advisor's in here, but I gotta just. Alright, I wanna look at. I didn't look at my chain, my option chain.
Back here on Morning Trade Live, Reddit
He's in
is
here
in
though.
focus this morning after meeting
He saved the Will Chamberlain of the market.
added it to the firm's conviction.
Oh my goodness.
Replacing Roku, the firm is positive on the company having 100% human-created content and notes that it's the fastest-growing company in
Yes,
its
sir.
coverage. Reddit shares are up nearly 40%.
I hung up on him when he was saying that.
Off of session highs, we're actually down 2% now in Reddit.
Keep on, what time you go to work, bro?
Stock here today, but it did hit up 237
It's almost 10 o'clock.
earlier in the session before pulling back. All right, now it's time to get a look at the
He's
big
actually
picture.
kept
Let's
going,
welcome
but I
our
didn't
next
even.
guest. That's going to be Colin Martin, head of fixed income research and strategy at the Schwab Center for Financial Research. Colin, I want to get your take here on just the data in general here today. We got a little pop there in yields, post that GDP. What was your takeaway?
It was a really strong report, across the board. We got the highest quarterly gain annualized in 2 years, and I think more importantly, it was driven by personal consumption. It shows that the consumer is still really strong, and we take that and kind of extrapolate that to what that can mean going forward in terms of what that means for the labor market. If the consumer continues to spend, that's a good thing, and hopefully that can keep the labor market supported from here. But one thing I thought of was going back a few Fed meetings. I forget if it was the October one or maybe at the end of the summer. Fed Chair Powell kind of talked about the economic landscape because we had kind of this divergence where the labor market was cooling while the actual hard economic data was holding up well. And he said something like, well, what's real right now? We're seeing this cooling labor market, but the economy continues to grow. I think that's, front and center right now. Very strong report right now. I don't think it necessarily changes the Fed's near-term outlook. The odds of a January cut declined a little bit, but they were pretty low to begin with. I think this will just give the Fed a little bit more time. It allows them to be patient going forward, and I think this kind of offsets a little bit of that little bump we saw in the unemployment rate, which sort of spooked the markets in terms of Fed expectations.
Yeah, and I think, Colin, one of the things I've kind of been, keeping in my crosshairs over the last couple of months is we haven't seen a lot of volatility in the bond market and the yield market at this point. We've been consistently around 4.1, 4.2% in the 10-year at this point.
Yeah, bro, I had one down.
Stability is
I got paid today. I think
over to some support for
they had
the
came
market.
in the afternoon or sometime. They delivered my check, boy.
Hey, we got to get that 10-year
I
down to 3.8%. We've got to get the 30-year mortgage rates down below the 6% level. Are we comfortable when you see numbers like today?
I got to buy a couch too. Once I buy this couch, I'll turn my camera on for the stream too for a little bit more.
I think it could be a good thing. And you hit the nail on the head. The 10-year Treasury has been remarkably stable over the past 3 or 4 months. And as you mentioned, between say 4% and 4.2, which is today, touching 4.19 or so, its highest level since early September.
Yeah, turn the camera on.
I think that's a good thing.
People was coming in when I had my camera on, for real.
We don't
they like that shit.
Long-term yields to necessarily fall if the Fed continues to gradually cut rates. So unfortunately,
I really want to play some chess again, bro.
Mortgage rates fall much further. But on the other hand, being the old two-handed economist here, a steeper yield curve is a good thing.
It's like some rust, bro.
Of a healthy economy, a growing
it's always rust when I come back, bro. And I hate losing too, bro.
So I think it's generally a good thing if we see yields, if they're staying elevated around 5% for good reasons. Now, there's also some potentially nefarious reasons that make us a little bit nervous in terms of increasing supply or if inflation remains elevated. But just at its heart, a steep yield curve is a good thing. And we think
that's why I tried to tell this dude in the parties, bro. And he always say, I wasn't listening to him. And then I get with you, you say I don't never listen to you. And then I'll be like, damn. I was listening to y'all, and I took notes. I took notes. Like, I be trying to look at every single note every day so I can just get back in my head on what the heck is it, of everything, you know what I mean? Like, that's why I be having all this shit in front of me, bro. This is almost like you get me? I don't know what to call it, bro, but I try to take this shit as serious as I can. I ain't never done that with anything else, you know what I'm saying? This is crazy.
The fundamental basis for it, it's earnings. Earnings growth has been better than anticipated, and a lot of people are calling for that to get extended.
I'm just trying to be one of the greats like the mother cats, you know what I'm talking about? Just trying to be one of the greats. When it's all said and done,
too much into stock earnings, things like that, because I look more
give it to them kids. My kid about 16, she get a hold of this.
Credit spreads are very low.
I told her I want her to take over.
It can be a bit concerning because it can limit performance for corporate bonds. It can limit outperformance. But credit spreads are low because fundamentals are relatively strong. You look pretty much across the credit spectrum. The biggest risks we see are really at the lowest, riskier parts of the market. So that can translate sort of to the stock market outlook as well in terms of nonprofit profitable companies, things like that. But on the credit markets, we think the biggest risks are, say, those triple C rated bonds. But if you're looking at the higher rungs of high yield and especially investment grade corporation, things are looking okay. We saw that in the BEA release of corporate profits today with GDP. On a pre-tax basis, over $4 trillion, a new all-time high. So corporate fundamentals are relatively strong. That's why we see credit spreads so low. You know, investors are willing to lend at tight spreads because they think the outlook is pretty strong. Fundamentals are relatively strong. We are a little bit cautious though. Because it does limit the outperformance, and if something does change and the economic outlook does change, you can see the prices of some of the riskier corporate bond investments fall pretty sharply. So we just don't think the risk reward looks particularly attractive.
Yeah, I already know, bro.
Doesn't mean investors need to go out, because like you said, if
that's what I already know. That's how y'all both fall. That's why y'all so damn harsh. Cause y'all just know that it's that easy and simple. I just listen, or anybody just listen. I already understand.
Head of fixed income research and strategy at the Schwab.
You know, this is like
research. But coming up, it's time for the morning trade. We'll take a look at Tesla, which hit a new all-time high just yesterday. Morning trade live coming right back.
Bro, you know I'm still on this PL play, and I had got paid yesterday too, which is crazy.
Trading at Schwab.
I didn't think I was gonna get paid today. Where all I do is check the mailbox.
With tailored education. Get an expanding library filled with new online videos, webcasts.
I took this one because I've seen the same shit.
All crafted just for traders, and with guided learning paths stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly.
I appreciate you, bro.
Schwab Network delivers real-time market insights.
We're gonna have to have lunch.
NASDAQ, SIBO, and beyond.
Gotta go have lunch.
Economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere.
So if I find me a queen, if not, we got to go have lunch.
Experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in or on demand. Go to schwab.com/coaching and start learning today.
I already know you don't.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits,
I'm looking at this PL lead. They want 1,000 for it.
Opening Bell, live at the NYSE, right when it counts.
I don't even think I can get 1,000.
We're back here on Morning Trade Live. We're going to focus
I mean, I could though. Honestly, I probably could. It might be almost the best I do.
Over 125% from the taper lows after hitting an all-time high during yesterday's session. Shares are down about 2% from those levels in the market early trading today, but the optimistic trade continues. Let's bring in our next guest, and that's going to be Marley Caden, Schwab Network contributor here, to help us break down what's going on here. I did see a note yesterday from UBS that reiterated their sell rating on the stock, but we got some positive activity from the analyst today.
We did. We got a note from Canaccord today, and like you mentioned, they did hit an all-time high yesterday. Just missed that record close. They got very close to it. They did close the day up about 488.73. 498.83 was that all-time high that they hit midday.